Welcome to The Explainer. Today, we're jumping straight into the high-octane crypto market of August 19th, 2026. And honestly, the best way to look at today's price action is like an epic tournament arc. We're talking a massive, dynamic arena where bulls, bears, and some colossal macro catalysts are all clashing for total dominance.
So, let's kick things off with the ultimate question hanging over the arena right now. The market is going through a very cautious recovery, and everybody is staring at the boards asking the exact same thing. Are we actually looking at a true structural trend reversal here, or is this just a mechanical short squeeze pulling the strings?
It's like this persistent paradox for Bitcoin traders right now. You look under the hood and on-chain metrics are basically whispering accumulation. But the price? It absolutely refuses to move decisively higher. So you've got conviction buyers gearing up in one corner, but this heavy resistance in the other corner just isn't budging. It's a classic standoff, and it is perfectly setting the stage for some explosive moves.
Section 1. The Cautious Crypto Recovery. Let's step into this opening round and check out the recovering health bars of our crypto heavyweights. Looking at the underlying data, we've got a fascinating tug-of-war going on. On one side, Bitcoin's apparent demand, which is how we measure volume traded above a long-term baseline, has actually trended upward from deeply negative territory all the way back to near zero. We literally haven't seen this since the capitulation phase back in April. But on the flip side, technical selling volume, the spot cumulative volume delta, is still outweighing the buying volume on exchanges. So it's this intense head-to-head battle between structural on-chain data and technical resistance.
Section 2. Institutional Inflows Power Up. Our protagonist market is getting a massive combo boost from institutional players. And honestly, this might be the momentum shift we've been waiting for.
Bang! Just look at this number. U.S. spot Bitcoin ETFs just recorded a net inflow of $189.3 million. Serious capital is flowing right back into the arena.
Pow! And that charge? Heavily led by BlackRock's IBIT ETF, which brought in $143.6 million entirely on its own. The heavy hitters are for sure deploying their reserves right now.
Boom! Plus, Ethereum ETFs are joining the combo attack, racking up some really healthy gains of $71.4 million.
This completely paints the picture of where we're at. We're looking at 2 consecutive days of positive flows, which brings the weekly Bitcoin ETF inflows to roughly $486 million. This proves that institutional capital has stopped retreating. They aren't running for the exits anymore. Instead, they're stepping up and forming a rock-solid structural floor against the lingering liquidation pressure.
Moving on to Section 3. Heavyweight Macro Catalysts. What's really wild here are the massive environmental hazards dropping into our tournament today. It's not just about the charts, it's about the real-world events that are driving them.
Traders are absolutely bracing for impact because we have 2 giant forces colliding today. First up, President Trump is meeting with executives from companies like Coinbase and Ripple to discuss the stalled Clarity Act. Regardless of where you fall on the political spectrum, the market is watching this incredibly closely to see how it might shape future regulatory frameworks. And, right at the exact same time, the Federal Reserve is dropping its July FOMC minutes. Traders are going to be hyper-analyzing those minutes, hunting for crucial hawkish or dovish signals on interest rates. Either one of those could violently swing the momentum for our crypto heavyweights.
Section 4. SEC moves and security exploits. As if those macro events weren't enough to deal with, we've got sudden regulatory rulebook changes and some unexpected villainous exploits completely shaking up the battlefield.
The chaos right now is structured across 2 distinct fronts. On the regulatory side, the SEC just proposed a new regulation crypto assets framework. They're attempting to create a $75 million compliance pathway, including a $5 million startup exemption over 4 years, so certain tokens can actually avoid being classified as investment contracts. But right while the market is trying to digest that major rule change, hackers have struck. Maya Protocol suffered a brutal $11 million token credit exploit that drained its liquidity pools due to system flaws. And Harmony? They are literally preparing a massive blockchain rollback after a staggering 4 billion one tokens were exploited. It is a highly hostile environment out there today.
Section 5. The Price Action Battlefield. Let's see how all this chaos translates to the actual live combat on the charts.
Okay, so the crucial takeaway here is that Bitcoin is stubbornly defending its $64,000 structural floor. It is taking hits, but it's holding the line. However, the spot cumulative volume delta, which is what tracks buying versus selling pressure, is down 40% below its 200-day moving average. So that tells us these technical selling headwinds are actively trying to push Bitcoin down, but right now the institutional demand is strong enough to block the attack.
Meanwhile, let's check Ethereum's health bar. ETH is currently testing a very critical resistance wall right around $1,918. If the bulls can secure a 3-day close above this level, it could unleash a powerful upward attack toward that $2,000 psychological milestone. But if they fail, they risk falling right back down to the $1,880 support zone.
Over in another part of the arena, Solana is flashing some serious power signals of its own. It's nearing multi-week highs right around $77. With rising open interest pointing to a surge in trader activity, a successful break here could absolutely launch Solana toward an $83 target.
And in an epic psychological clash, XRP whales are making massive million-dollar transfers. We're talking a 280% surge in whale transactions to try and reclaim that crucial $1 zone. But they definitely aren't out of the woods yet. They still have to break the $1.02 resistance boss to actually shift the underlying bearish trend.
Section 6. Brace for volatility ahead. With all these attacks, defenses, exploits, and political showdowns colliding, we are setting up for an explosive finale to this phase of the market.
This data point right here is absolutely essential for understanding the current meta. Derivatives data reveals that a staggering 81% of recent liquidations for Bitcoin and Ethereum were shorts. What does that mean? It means what we're seeing right now is a highly controlled short squeeze. The price is going up largely because short sellers are being forced to buy back in to cover their positions, not necessarily because of some massive leverage-driven mega rally from a wave of new buyers.
So, if you want to survive the intense volatility of the Fed minutes and the political headlines hitting the wires today, you need to watch 3 key indicators. Keep your eyes on spot ETF inflows to see if institutions are still buying, watch technical support to see if conviction buyers can hold the floor, and finally, track on-chain apparent demand to see if it finally crosses into positive territory.
As the dust settles on today's massive catalysts, you have to ask yourself this final question. Will sustained spot demand finally break through that heavy resistance, or is this just a momentary pause before the bears strike back and force a retreat? Keep a close eye on those charts, watch the data flow, and we will see who takes the victory in the next round of this incredible market tournament. Thanks for joining this explainer, and I'll catch you next time.